Good morning, everyone. Thank you for joining us today. It's my pleasure to kick off this webinar by introducing our first speaker. We are honored to have our chairperson, Mrs. Amina Omulisa Rwakunda, with us today. The vice chairperson of the Rwanda Stock Exchange. She will begin with some welcome remarks to set the stage for our discussion. Mrs. Amina Omulisa Rwakunda is a highly accomplished economist with over 2 decades of experience in the field. She has worked for the government of Rwanda in various capacities as senior economist and head of macroeconomic policy in the Ministry of Finance and Economic Planning. Her area of expertise include advising on macroeconomic policies, fiscal policy, taxation, debt management, economic recovery, and economic development and planning. She has also played a crucial role in regional integration matters as the Deputy Chief Negotiator for Rwanda on the establishment of the East African Community Monetary Union. Mrs. Amina Rwakunda, the floor is yours. Thank you.
Thank you, Alice. Thank you for having me for this workshop on a new instrument that we are introducing in Rwanda. So, dear ladies and gentlemen, distinguished speakers and colleagues, good morning. So it is a privilege to welcome you to this workshop on real estate investment trusts, or REITs, an innovative and new instrument, and in addition to our capital markets. So today's session is a significant step in exploring how REIT can expand investment opportunities and promote broader economic growth in Rwanda. So as a new investment avenue within our financial landscape, REIT is going to offer a unique opportunity to foster savings and attract investment by making real estate ownership more accessible. With REIT, individual investors can enter the real estate market with relatively modest contribution, gaining access to income-generating properties that were previously beyond their reach. So this inclusion opens doors to a broader spectrum of investors, helping to build a strong culture of saving and investment in Rwanda while diversifying individual portfolios. So we believe REITs have substantial potential to drive economic growth by stimulating our real estate sector through capital investment in construction, property management, and related industries. So this flow of investment will create jobs across a range of roles, laying foundation for sustainable and inclusive economic development that benefits both investors and the broader community. So as we embark on this journey to unlock the potential of REITs in Rwanda, we look forward to the diverse opportunities this new instrument brings. We are looking at diversifying our investment, stimulate real estate growth, and drive economic progress for Rwanda's future. So today's workshop is an invaluable opportunity to hear from our esteemed speakers and industry leaders who will share their insights on the mechanics, regulatory frameworks, and strategic opportunities that REIT present for Rwanda capital markets. So this initiative is proudly organized by the Rwanda Stock Exchange in partnership with the Capital Market Authority to provide a unique forum for collaboration and knowledge exchange among policymakers, investors, and industry professionals. So as the Vice Chairperson of the Rwanda Stock Exchange, I would like to extend my gratitude to our distinguished speakers for honoring our invitation as we begin this journey towards realizing the potential of REITs in Rwanda. Thank you all for joining us, and I wish you a productive and insightful workshop discussions. Thank you.
Thank you, Chairperson, for a good welcome remarks. I've noticed that I did not introduce myself. I apologize. My name is Alice Iriwagiza. I'm the head of market development at Rwanda Stock Exchange. This is a great opportunity indeed to get insight from the industry expert. I would like to start with the first presenter. He's going to present an overview of REITs and how to invest in them. This is Mr. Geoffrey Odundo, Group Executive Advisor, CPF Group, and Chairman REITs Association of Kenya, RAC. Mr. Geoffrey Odundo is the Executive Advisor at CPF Group and the Chairman of the REITs Association of Kenya, with over 31 years in financial services and prior roles, including CEO of the Nairobi Securities Exchange, NSE. He led major initiatives that positioned it as Africa's 5th largest exchange, introduced trading platforms for diverse asset classes, and developed the industry standard ESG disclosure manual. Mr. Odundo is a PhD candidate at the University of Nairobi and holds advanced degree in strategic management, mathematics, and economics. Mr. Jeff, the floor is yours. Thank you.
Thank you very much, Alice, and really nice to see you after a long time, and really happy to be here. I feel very warm around Rwandans. Greetings from Kenya, Nairobi. We're happy to be in this forum. Thank you very much, Vice Chair, for your introductory remarks. Happy to be engaging with you. So my introduction, you've been given my name. I'm Mr. Odundo. I'm the Group Executive Advisor at CPF Group, which is a financial group in Kenya. Prior to that, I was the CEO of the Nairobi Securities Exchange. I'll request Alice to load the slides, see if we can run them. And as we do that, first of all, to say that we are very happy to collaborate with you, especially in advancing this very key subject. The REITs market have taken root in Kenya, and we're happy that it's now being adopted across the region. I also carry the hat of the president or the chairman of the REIT Society of REITs Association of Kenya, REK, and in that role, we are trying to advance the growth of REITs by bringing in all players together so that we can all coordinate and see how we can lobby for policy advancements, and also just the knowledge share to help the market grow. We're happy to have come off a REIT market conference just a couple of weeks ago, and happy that Rwanda attended, the CEO of Rwanda, Mr. Destin, attended, and we've seen progress. So if the slides can be loaded now, I'll be happy to take it from there. Okay, I was told Alice, you are to load them.
Sure, I'm doing it.
So just in starting that, sorry, as we start the conversation, so Kenya happens to be a very a market where its people are very sentimental around property, and so we've made significant technology.
Hi, Jeff. Probably I can assist.
Amina, could you load it?
Yes, please. In a moment.
Yeah. Yeah. So I'm saying we faced significant advancements in adoption of this asset class. You could take it to the first slide. And we're happy to say that today our REITs market has taken a major role, and we are now seeing very good progress. So the journey to this market, this product began in 2013 when we started exploring the area around alternative assets and how are we going to create more products for the exchange. So the exchange was primarily dominated by two products, and I think that was a similar situation in most markets in Africa. And so the issue around alternatives was a very deep conversation going on. And having realized that there was a very quiet asset class where everybody was sentimental about, we asked ourselves, how could you bring this into, or how could you convert this into a product that's tradable in the market? And hence the journey of the REITs market. Move to the next slide. So we can move to the next slide, Amina. So the REITs market, if you look at the property markets in Kenya, we are predominantly a market that has a huge exposure in residential, commercial, and industrial. We've seen offices becoming a very key asset class that's growing, infrastructure as well. So the REIT markets globally are very diverse. We recently held a conference in the United States where we were pleasantly surprised to see that the REITs can take any form and shape. You could have REITs of farms, you could have REITs of roads, you could have REITs of different nature. In fact, we ended up with a very interesting statement that everything is REITable. So it's really how you package it. But you look globally, that is how the global markets are distributed across various sorts of sectors. The next slide. Incidentally, in the US, the REITs market is valued at about $2.3 trillion, a really big number. And we had an opportunity to actually engage with different REIT associations. So it has advanced to a level where they don't have one association, so they've got an umbrella association of REITs. And I think that's a journey we will take. Now, I thought I should just share a perspective of why do we think REITs have a great opportunity?
No, I don't know, but I tried to call him to confirm, and he sent a message. He's on the way. I'm sure they have.
Somebody be muted, please. So you look at these are just a snapshot of the properties in Kenya, top properties in Kenya. We're looking at about 16,248 potential commercial properties in Nairobi that can actually be considered for a REIT. And we've given you like the top 30 towers that are within the city, which gives us about 822,000 square meters. And these are really the target markets of the REIT. We believe that at some point we'll eventually have most of the commercial assets in REITs, and hence we must start the journey, and we can see some great opportunity taking place. So that's just a snapshot of the potential of REITs markets, of the REIT market in Kenya. You could move to the next slide, please. My slides are not moving in my pace. Amina. Why do we think REITs are a competitive asset class? We did a very small comparison here, looking at the risk return metrics. And if you look at the shading, go back to the previous slide, please. If you look at at this graph here on your left, Amina, the previous slide. Yes, there, stay there. We've given you sort of a conundrum of different returns and risks. Or you've gone back to this. I was speaking to the earlier slide. The REITs sit right in the middle of what you call a medium risk and a medium return sort of asset class. So it's really the asset class you want to have in your portfolio to hedge you against a very high downside, and also take advantage of a moderate upside. And why do we say this? Because the asset class that you're holding is property that has got a moderate return, but it has also got a hedge against inflation, against depreciation, because it sort of tends to appreciate in difficult times. So it's the kind of asset you need in your portfolio. However, how we hold property is important, especially for pension funds. If you're going to hold property in direct ownership, then you're faced with the challenge of liquidity. You're faced with the challenge of realization of that asset if you need to, and hence holding it in an efficient vehicle like a REIT then achieves that level of results that you want or you desire. So we think it's a very important asset class for you to hold, because it gives you a hedge on the downside, and it has also the potential of giving you a better upside in good times. The next slide, please. In the next slide, we did a comparative of the performance of the investment portfolio, or property portfolio in a very challenging time. We compared this to the COVID, in the COVID times. We compared this using two other parameters. We use the USD shilling exchange rate, and we use the average TB rate. So if you look at the red line is really a demonstration of how the housing index has appreciated over time. Even during COVID in 2020, 2021, you can see it was very defensive and consistent, whereas the other two matrices, this is the T-bill, which is the black line, was actually highly volatile, and also the currency was experiencing some level of volatility. So over a period of time, when you carry out some testing, you see properties provide you with a relatively stable income stream, and hence a stable performance. And so that's why we think having properties in form of a capital market instrument then is a more desirable way, or it provides a more desirable way to diversify your risk and also generate some level of consistent returns. Move to the next slide, please. This slide just gives you a snapshot of the REITs. So in Kenya, we have got 4 REITs. The ILAM REIT, this is a mixed development REIT. We recently put it on what you call an unquoted market segment. It was previously a listed REIT. It's currently valued at about 3.3 billion Kenyan shillings, with an NAV of 18 shillings and 27 cents. And you see it has paid dividends of 70 cents in the last 4 months. And then we have got 2 REITs issued by a company called Acon. This is a development and an income REIT. They're also placed on our unquoted market segment, and I'll explain why. Now, these REITs are primarily for student-built accommodation. So this company came into the market, raised funding for building student accommodation, and I think they're now in excess of 7,000 beds. And these are primarily for university students, and they are valued at between 11.5 and 8.8 billion, with an NAV per unit of 24 and 22.03. And if you look at the trading prices of these 2 REITs in the market, they've been fairly close to NAV or above NAV, which means that anybody who's put in his money has not experienced any devaluation. Then the last one we have is called the Laptost Imara I-REIT that has been issued by the company I work for, called CPF. This is also a mixed development REIT comprising of commercial offices, residential and educational buildings, valued at 7.3 billion. The NAV is 19 shillings and 60 cents, and has paid a dividend of 50.57. So you can see the REITs are performing. They are actually liquid. They are trading, and we have got such a very diverse pool of REITs in Kenya that can inform, that can actually interest different forms of investors. So in the next slide, I'll be speaking to each of them. Maybe you can go to the next slide. So the 4 REITs, as I mentioned, we have them, and 3 of them are in the unquoted market segment, and 1 is on the NSE listed market, and I'll speak to that in the next slide. Move to the next slide. Now, in the next slide, we will look at each of them. The first one is Acon, and you can see from Q3 of 2021 Those are the turnovers over the period. This REIT, the D-REIT and I-REIT, have turned over about 647 million Kenya shillings since its operation. And hence it's been listed on the unquoted market segment. So in Kenya, you can list a REIT in two segments. You can list it in two markets. You can either list it on the main market, and that's a market, that's a stock exchange, the exchange platform itself, or you can list it on the unquoted securities platform, which is an unlisted platform. And we've seen more REITs taking this route because of you want to ensure that there's more price stability, because these ones are based on fair valuation, yet in the market, they are open to open market trading and hence can experience a volatility. However, both markets are interrelatable. The USB provides a good starting point for a REIT because it helps you build your track record, and then you can transition into the main market, which is almost the most desirable place to be ultimately for a REIT. Move on. Next slide. Okay, the next slide speaks to the Love Trust REIT. So these are very unique REITs. Now this REIT is a REIT issued by a pension fund, which is Love Trust pension fund. What the objective of this REIT one was to help the pension fund manage its properties more efficiently. They had a huge exposure in property and were not able to invest into more property, and so the felt that let them convert them into REIT and reclassify them. So it helped us comply with the 30% requirement of holding of property. There was no intention to raise money. This REIT was just for a compliance purpose. The whole intention in the long run is to have more liquidity around it so that we can unlock value and use the monies to invest in other assets and bring more products into the market. It's currently restricted in that it's only open to institutional investors. The limits are a bit higher, and then there's a small moratorium, flexible moratorium, I must say, to allow us to ensure that we achieve some level of price stability. The whole intention is that in the long run, we will be able to use this REIT platform to bring on board more properties once we're able to unlock value of some of those that we've been able to, that are currently sitting inside the REIT. Move on. The next slide, please. So, well, why would we want to go into REITs markets? What is really I would say, what's the motivation? Now, the motivation is driven by many things. Today, our cities are experiencing a high level of urbanization. There is demand for housing. We need to find more innovative ways of developing housing. And so I think one of the ways that we can do that is by bringing in the capital markets to play its role. And capital markets can only come through products. And hence, having a REIT allows capital markets money to be more active in the development of real estate. One, because capital markets money require a high level of liquidity. They require competitive yields, and hence the kind of how you structure an asset for investment for capital markets money to participate has to be innovative, and that's what's driving the interest in REITs. We have an emerging middle class and a bulging youth, so they are not able to. Their investment thesis around property is not to own property directly. They want to own property through unit trusts, through specialized funds. They're not interested in owning a title deed like we did ourselves. And so this growth of the middle class is becoming a bit more innovative, a bit more savvy of how they want to own property. And so a REIT addresses that interest. Investors want to have a diverse pool of investments. You don't want to have an exposure in one asset. So a REIT allows you to invest. If you invest in a mixed asset, mixed development REIT, you're able to get exposure into commercial development, real estate, residential, all using one unit of a REIT. And that's why sector diversity helps. Government are looking for partners to develop properties. For instance, in Kenya, we have a very big push around affordable housing. And so the way the capital markets can participate in the affordable housing is through REIT structures. So we do have something called the Kenya REITs, which is like a government-led opportunity to bring together players to do REITs for affordable housing. Investor interest locally and internationally. International investors would like to own real estate in Kenya, but the most efficient way, again, is through REITs. And we're seeing technology advancements. I mean, today, people are looking at how can you own property in a more efficient manner, tokenizations and all those kind of things, and then REITs address them. And the capital stack, or what the areas that are looking to invest, the investors that are looking to invest are very diverse. Segregated funds, long-term insurers, banks, individuals. And in Kenya, we assess that the potential of money that will ultimately find itself in REITs one day will be in the region of 12 trillion Kenyan shillings. So you can see it's sitting on a huge potential, but how then do we create a vehicle to let the money flow into the markets is an important discussion. Can move to the next slide, please. So I mentioned earlier that we have 4 REITs, and just to give you a bit more perspective on what is the character of each of these REITs. So the Econ REITs I mentioned are for student accommodation, and on your right-hand side you can see the purpose-built student housing being done by Econ. Very, very attractive. So far, over 7,000 beds, and with a very strong potential to increase that to 13,000 fairly shortly, and providing very good student accommodation for the university and college students. The Island Fahari REIT is a mixed development REIT. This one has a mall and has a number of other corporate buildings. The Lab Trust in Mara IREIT is a very diversified REIT with education, commercial property, residential property, all in its portfolio. So again, pretty diverse. And yeah, so those are the structures of the REITs that are currently in Kenya. Move on. Okay. It's like we're experiencing some challenge. Amina?
Apology, able to see my screen?
Yeah, but it's not moving.
It's not moving? Okay, let me try again. Now?
No, it's not moving. Stuck on one slide. Oh yeah, now it's okay. Now it's okay. Now, the other thing that we did, in order to encourage the development of REITs in Kenya, we came up with a REIT toolkit and incubator program. This is done in collaboration with one of our partners, the World Bank, through the JCAP program. And this toolkit was primarily set up to encourage potential REITs to go through some sort of incubation so that they're able to understand what are the requirements at the stages of going through a REIT. One, because the first few REITs that we set up in the market went through a very rigorous process in terms of putting it into market. Some of those involved structuring, reorganization of certain aspects, and hence it was creating some level of there wasn't much motivation to come to the market. But we said, why don't you create a learning platform so that new REITs can come and understand how REITs are issued, how the structures happen, how do we bring in different advisors. So our toolkit program is structured into 2. It has a toolkit program, it has a REIT incubator, and you go through a 5-stage incubation. Study from understanding how REITs are set up, what is the benefit of REITs, what's the process of launching a REIT. We then look at the business viability of your REIT. How do you model it? How do you reorganize the REIT to make sure it can achieve some level of capital markets interest? Then the 3rd stage is how do you design? How do you then come up with other aspects of sustainability, trying to get the right return? And then we have a stage around development, looking at structuring the REIT, coming into contracts, bringing in players to carry out due diligence. And then the final phase is how do you mobilize, how do you go to market, what's the route to market, how do you launch a REIT? So this program helps potential property promoters to go through a very early process such that by the time they come to the market or want to issue a REIT, it's a lot easier. It's a clear understanding of what it's all about. We have members on the program who have gone through all the 5 stages and very imminently will be doing, will be issuing their REITs to the market. So I'd like to encourage the Rwandese market to consider setting up an incubator toolkit. We in Kenya, through the REITs Association, are very, very happy to help you put this in place. Yeah. The next slide, please. So a quick question, how REITs works. So REITs, the REIT structure is a very interesting structure. It has many players and participants. The primary players in this structure is the unit holders, who are the investors in the REIT. Then you have the trustee, who is the legal owner of the REIT. So when you set up a REIT structure, all the property assets have to be handed over to a trustee because they act on behalf of the unit holders. They become the legal owners of the property. And then you have the REIT manager who runs the REIT on behalf of the trustees or under the guidance of the trustees. And they do all the day-to-day, the bookkeeping, the making sure that the REIT is being run well. And then you can appoint advisors, property manager, real estate agents, development managers if you're in a D-REIT. So it's a very organized structure. And just to encourage the issuance of REITs, there are normally tax benefits around this. For instance, in Kenya, we do have a minimum distribution limit of 80% of income net of expenses have to be distributed back to the investors. At least 75% of the assets in a REIT must be property. You're able to keep 25%. There has to be a high level of transparency in governance structure and a high level of regulations. So it's a very unique structure. And really the benefits of having a REIT is that it removes compared to a direct ownership property, you're able to, 1, enjoy better yields, 2, have less involvement in managing your property because all this is being done separately. So it does give you a very high level of efficiency. So that is how it works. Everything is run by the REIT manager under the oversight of the trustee, and they appoint all these advisors to help ensure that the REIT is run well. Can move on to the next slide. So who can invest in REITs? Developers, pension funds, financial institutions, insurance companies, the whole universe of what we're showing you here. Is considered like any other capital market instrument, and hence it has the character of an investable grade asset. So that is really the benefit, and these are the sort of players who can invest in the REITs. Hold on. This was just a snapshot of who are the shareholders of the different REITs. As you can see, in the Econ REITs, you have institutional investors, and this REIT was very interesting. It was anchored by a DFI, Infraco, which is part of the British investment community. The Island one, you can see as a distribution, even in terms of diversity, it has got a regional distribution, including Uganda, South Africa. And so, this is how you'll get your market to open up even to other players to come in. So how you structure it is important. Its compliance, its regulatory framework that you put in place is also very critical if the REITs are going to succeed and attract a high level of institutional investors, which is normally very good for a REIT because these help you with continuous fundraising, and number 2, give you better price discovery for the REITs that you issue in the market. The next slide, please. Different form of REITs mentioned earlier. I can't overemphasize that REITs can be of any nature. What's even in the future, we'll have REITs of data centers. We'll have REITs of roads. We'll have REITs of different types. So it can be structured as long as there's an underlying asset which is of property in nature, it can be structured. And you can see, for instance, in technology, even towers, the data center and cell towers are becoming REITable. So it's a very futuristic asset in that it can actually be structured for any form of assets that you desire. Hold on. So why invest in them? Why would an investor put his money in the REIT? Now they're asset backed. So underpinning every REIT is something tangible. You're not putting your money into an intangible asset. You're putting money into a tangible asset, which has got income and potentially capital appreciation. In Kenya, they're highly regulated. You can see all those regulators, the Capital Markets Authority, the Exchange, the Revenue Authority, the Retirement Events Authority, all have a role in ensuring how REIT is run well. It has a high level of price discovery. Today, if you have a direct ownership of your property, you're wholly reliant on an annual valuation, which has fair market valuation. But this one, the fact that there's a market that's trading on, gives you a high level of price discovery, and you're able to know the true value of your REIT or of your property. So that is why some of the reasons you want to put in, and also the fact that it gives a very stable return, and even above direct market returns in some cases. Hold on. It frees management the bandwidth of managing a REIT. You can imagine if you have a whole portfolio of property, you have to put in place a whole team, staff, potentially a company to run the whole property portfolio. Once you have a REIT, all this is managed. It's as a promoter, I outsource that entire activity to a different party, and I become just an owner, drawing my revenues without actually having a day-to-day involvement in running the property. The other one is agility. Speed of entry and exit to market is easy. You can come in, you can exit because it's tradable asset. It gives you a diverse portfolio. I can today, as a new investor in property, I can buy into a REIT that has mixed development, and I'll enjoy the exposure of different sectors. So I don't have to buy property in commercial, property in industrial, property in this area. I'll always be part of parcel of any interesting activity taking place in any of those segments. And then the tax efficiency, how to implement it is very, very efficient and easy. And hence, these help make REITs interesting asset classes to invest in. Move on, I think we're winding up there. Now, in Kenya, I think we've seen a huge interest in investing in REITs. One, because of its level of transparency, robust legislative and regulatory environment. We have favorable economic conditions. The property market in Kenya has been really, really robust for the last few years. The tax incentives that we look for, there are already some that exist. We're trying to push for more, especially around stamp duty, which is a very key incentive if you're going to have REITs, because REITs involve transfer of property from direct ownership into a fund, and that can involve some level of stamp duty. And this is something that we want you, as you set up your market, try and give REITs exemption against stamp duty so that people can actually bring in their properties into the portfolio. They're professionally managed. They're good for long-term investors, pension funds, life funds, insurance companies. They give you a diverse portfolio exposure. Now, REITs can raise money regularly, depending on its valuation. REITs can continue to raise money for further and further investments. And they have a relatively high payout. As I said earlier, the ones that have been in Kenya have been performing well. And so they do outperform direct property returns in Kenya. So I think that's where we'll wind it up. Just to say that, and in winding that, I'm really happy to be part of this journey. The REITs market started in 2015 when I was the CEO of the exchange. And now we have four REITs and growing. We have a pipeline of another 5 REITs that are looking to come to the market. Recently, when we held this conference in Naivasha, I was very delighted to see countries like Zimbabwe, who learned a lot from us, have issued almost 5 REITs. In Morocco, we were astounded by the number of REITs they've done, over 200 REITs. So I think in the long run, this is how properties will be owned for the future, because the future investors will not want to be tied onto direct property ownership where there's illiquidity, low yields, difficult to exit. They'll want efficient ways of buying and selling assets. So I would like to encourage my brothers and sisters in Rwanda to really adopt this asset as a key future for how property development will take place in Rwanda, and join us in this journey. We invited the Rwanda Stock Exchange and the Rwandese companies to join the REITs Association of Kenya so that we could reduce the learning curve. And I can see my friend Agnes, who was with me, Naivasha, would like you to be members of our REITs Association. And in the long run, we'll set up what we call the Pan-African REITs Association. So we've already sent you invites. Come and join us, and let's get to learn together. So thank you very much for giving me this opportunity, and I wish you well at the rest of the conference. Thank you.
Thank you, Jeff, for a good presentation. It was really insightful. And all in all, we are lucky to have you in the region. So we are lucky because we have you, we have the experts, so we shall learn from you. To manage our time, I would like, if someone has a comment, question, concern, you can write it down. Then we have an open discussion at the end. So you will have that time. Otherwise, you can drop it in the chat box for us to manage the time. So the next topic is building a domestic market for REITs. The expert is Mr. Karopa Alex Chipati. Mr. Karopa Alex Chipati brings extensive experience in capital markets and the private equity, specializing in financial analysis, modeling, and investment strategy. He has led significant transactions, including Zambia's first rights issue and corporate bond issuances. Holding a degree in economics and mathematics from the University of Zambia and an FMVA certification, Karopa is committed to driving informed financial decisions and sustainable business growth. Mr. Karopa, over to you. Thank you.
Thank you very much, Alice. Thank you very much, Mr. Godfrey. That was a very beautiful presentation. So just to start, personally, I've always been inspired by Kenya's capital markets. I think there's so much to learn from. Kenya's capital markets has set the bar to what an African exchange should look like, especially by being very innovative. In fact, when we were doing the first REIT in Zambia, like that was last year and a bit of this year, we were constantly looking at Kenya, how the Kenyan models worked. And if you look at Zambia's local legislation, you notice that it's very similar to the Kenyan model. So Kenya has really set the bar to what to how to do REITs and just the capital markets. Since 2015, having 4 REITs, I think it's amazing. In Zambia, we have had REIT regulations for a while, but we only had our first REITs this year. So what we've achieved so far and the pipelines we have, I think it's commendable. So yeah, thank you very much, Mr. Godfrey and Mr. Geoffrey. And I really hope that maybe the Rwanda Stock Exchange can constantly consult, and we'll constantly consult from our end. I like the idea of a Pan-African REIT, so I think that's something even like locally we can participate in. So I hope we get to keep in touch. All right, so I'll share a presentation. Though unfortunately, what I have to say is that Mr. Geoffrey did a good job with explaining the REITs. And like I had mentioned, REITs in Kenya and Zambia, they're very similar in terms of structure. In terms of size, not really, but in terms of structure, they're very similar. Just let me know if you're able to see my screen. I don't think you're able to. Let me just fix something. Okay. Alice, just give me a minute.
Sure.
Okay, I'm sure you're able to see my screen, right?
Yes, we can see it.
Yeah, so I'll emphasize again that the REIT in the Kenyan model is, I think the Zambian model was basically built from the Kenyan model. So in terms of structure, I knew this even before the meeting, but especially Mr. Geoffrey even confirmed it further. But I'm going to talk about it either way. So I'll talk about the salient features of REITs in the Zambian case. Salient features of the REITs, I think they are very similar to what you see across the world. So the first thing you have to see is that in Zambia, a REIT is supposed to be a closed-ended fund. A closed-ended fund. What that means basically is that it's supposed to be a listed entity.
Excuse me, Kanopa. Agnes, can you mute? You will be given a time after. Thank you.
Yes. So in Zambia, so typically we have open-ended funds and we have closed-ended fund. With open-ended, this is where you find mutual funds, unit trusts. If you want to buy units in a company, you go to an open-ended fund and then you buy units. But with closed-ended, this is how, if you want to invest, you have to buy shares from someone else. So that's what a REIT is, closed-ended fund. And typically this means that it's listed on an organized exchange. In our case, we're talking about the Lusaka Securities Exchange, our local boss here. And so that's the first requirement, that the REIT is supposed to be listed or publicly traded. The second thing is that it's very standard. If a company is listed, it's supposed to have at least 2 minimum investors. That's a requirement. You can't just, an individual, like we're talking about Acorn just now. Acorn can't just go to the public and get listed. But so in Zambia, we need at least 2 investors. And then for you to qualify to getting a REIT status. So the way we do it in Zambia is that we have the Securities and Exchange Commission. The Securities and Exchange Commissions, they are the regulator, the market regulator, and then we have a separate exchange. I'm pretty sure maybe that's how it's done in most African countries, except a few. And then we have an independent organized exchange. So how it works is that you apply for a REIT status with the SEC, the Securities and Exchange Commission, and then after you make an application, then you take it. Then it gets listed on an organized exchange. So the SEC verifies that the REIT, the entity you're trying to get a REIT status for meets the minimum requirement for REIT qualifications. So they ensure that it will have at least 2 minimum investors, that it will be structured as a closed-ended fund. And in the articles of the company, it needs to be clearly stated. The articles of the company need to clearly state all these provisions. So meaning that for a company which is not yet a REIT, for them to get a REIT status, they have to do a lot of changes to the articles of association. So when we're doing the REIT here in Zambia, what to navigate that, changing the articles of association. So as you can tell, there's a lot of need. There is expertise that come in place, such as legal expertise. This was the first time this was being done in Zambia, so it was tricky, but we were able to produce more like something that both the company who was applying for the REIT status and the SEC were happy with. So there are a couple of requirements. So for example, for a company or an entity to get a REIT status, they need to have a minimum investment value. So let me just be mindful of the time. All right, I have 20 minutes. All right, they need to have a minimum investment value of about $2 million. $2 million. So meaning that at the very least, there needs to be an existing asset base to get a REIT status, and the existing asset base needs to have a $2 million minimum requirement. This also means that you don't get a REIT status first. You don't get a REIT status first and then do property development. In Zambia, you have to have a bit of property and then get a REIT status. Because first of all, a REIT, you can't put a vacant property in a REIT in Zambia. So if you have a property which is not which is a vacant property or it's bare land, for example, it can't form part of a REIT, or at least an income REIT in this case, property REIT. So that's a requirement, is that they need for at least a minimum asset value, and it needs to be income generating by the time you're putting assets into the REIT. Another thing is that there's a cap in Zambia for REIT. and this cap is very important, and we'll come back to it later. Geoffrey did touch on it, but there's a cap on operations. So REITs, it's not a secret anymore. It's not a secret anymore. REITs, they've got a different tax regime. They have a different tax regimes. So how the government tries to make sure that this is not abused is that they put a cap on operating costs. So in the Zambian case, your operation costs shouldn't be more than 30% of your gross income. Your operations cost should be more than 30% of your gross income, meaning that the money you spend on day-to-day operations of the properties, your management fees, and all those everything else, it shouldn't be more than 30% of the gross income. I'll at the end of this presentation, I'll give an example of how this helps. And then after 30% of that is goes to operations, and then, as Mr. Geoffrey correctly put it, at least 75% of the distributable income of the REIT for each accounting period is distributed to the shareholders. So there's a requirement that once you're profitable, if a REIT is profitable in Zambia, there's a requirement that at least 75% of its distributable income should be distributed to the shareholders. And you'll see why this is important later. So these are some of the qualifications for REITs. Before you are considered to get a REIT, there are certain requirements. These are the qualifications that you have to account for. Now, once you become a REIT status, like I had mentioned, there's a lot of, you have to draft your articles of association to reflect the fact that you're a REIT. So there's certain restrictions on investments that you have to sort of like account for. The first is that a REIT only invest in cash and cash equivalents and real estate properties. So meaning that a company cannot have a real estate portfolio and in there they put other assets, other income generating business activities such as manufacturing. So there's a requirement to only invest in real estate, and then there's you can invest between about 25% in cash or cash equivalents such as treasury bills. So there's that minimum threshold that you should always account for, and then there is so the way it's spread is that a minimum of 80% should be invested in real estate properties, and at least 20% can be invested in cash and cash equivalents, like I had mentioned. And what our framework in Zambia tries to do with REITs is that they're trying to diversify the risk. So, for example, there's a requirement that a REIT shall not invest more than 25% of its net asset value in a single property. So there's need for a diversification. Sometimes they do give waivers. There's a provision to give waivers to this requirement, because sometimes what you see is that a REIT has got a number of real estate properties, but maybe they have got one large real estate properties that has more than 25% of the total asset value. We have seen that in our case in Zambia. So there is you can ask for a waiver from the SEC, but this provision means that you can't have one building, one commercial property, and then register that as a REIT. Yeah, that's very tricky. You need to have a diversified pool of real estate property. So it can range from commercial real estate, residential, but in Zambia we don't have a residential REIT yet. Maybe I think it's because our residential market is not as strong as it is in Kenya. So there is that requirement to have more property or more assets instead of just focusing on one. So yeah, you diversify across the board. Second is that once you gain a REIT status, you cannot invest in vacant properties, meaning that if a REIT can buy additional properties, but there are restrictions on what properties they can buy. For example, you cannot buy vacant properties once you get a REIT status. So this means that, as Mr. Geoffrey put it, there are trustees who form part of the REIT, there are trustees who form part of the REIT, and then there's the regulators. So all these entities. Hi. Are you still able to see my screen?
No, we can't see it.
Okay, I don't know what happened, but I think someone started sharing something. Yes. So REITs are prohibited from investing in vacant properties. you have to realize that the legal framework really protects the shareholders for REITs. If you invest in a REIT, trust me, what happens, is, at least in the Zambian case, is that there's a lot of emphasis on investor protection. So all these restrictions on what you can invest in, how much you can invest, how you keep your cash, all these things, if you think about it, they are designed to make sure that shareholder wealth is enhanced. And that's why REITs have become, across the world, really, they've become investors' favorite because of the extra layer of protection that they provide. Now, there's and this was touched on a bit earlier. There's a requirement to distribute about 75% of your distributable income every year. So what this means is that, unlike typical PLCs, limited company, whereby dividend declaration is completely at the discretion of the board, this is not true for REITs. With REITs, the way they work is that 75% needs to be declared as dividend for as long as the company is profitable. So there is need to provide constant update to the regulators, and should you not be able to declare dividend, of course, you have to consult with the regulators, but there's a requirement. And that's why most Zambians, as they're realizing this fact, you see a lot of appetite. We're always on phone calls just to explain this, because what you see, like on the LUSE, the LUSE is quite a small market relative to other African countries and relative to other capital markets. It's with a very few listings. But from the few listings, what you see is that very limited number of stock declared dividends on a regular basis. We've got at best maybe 5 that consistently declare dividends. And then beyond that, it's always a gamble. Will it happen? Will it not happen? Maybe they declare once every 2 years. But with REITs, what you're seeing is that this requirement to constantly declare dividend, it proves to be investors' favorite, because in the Zambian case, what you see in the capital markets is that most investors, especially the retail investors, they really respond to dividend announcements, unlike any other market announcements, because maybe it's because of other factors, but what you see is that companies that typically declare dividends tend to have better year-on-year performance in terms of share price appreciation and in terms of trade activities. So what you expect to see is that once they realize that this company constantly declares dividends, there will be more liquidity for the stock, more share appreciation, and more enhanced shareholder value. So this structure, in as much as this one is simplified, I won't touch on it because I think Mr. Geoffrey spoke about it on how REITs, the structure for REITs. But as you can see here, one of an interesting characteristic of REITs in Zambia is that the properties need to be managed by a recognized property manager. For example, if I have a portfolio of real estate properties and I want to flip them into a REIT, there's a requirement to say there's an experienced property manager needs to manage the properties on my behalf. I'll just be a shareholder and I'll probably have both seats, but there's a requirement to have an experienced property manager to manage the REITs on behalf of the shareholders, on behalf of the board, on behalf of the trustee. So there's that requirement, and I think that's the point I didn't hear from Mr. Geoffrey. So, but in the case of Zambia, it's a very important requirement. So the legal framework in Zambia for REIT is that inherently a REIT is a collective investment scheme. Inherently, a REIT is a collective investment scheme, and then there are CIS guidelines. There are CIS guidelines in which the REIT guidelines are built on. So I've got the CIS guidelines, which basically all schemes fall under, because a REIT, like I said, is inherently a CIS. So when I remember when you're applying for a REIT status in Zambia, you first apply for a collective investment scheme. So for lack of better way of phrasing it, a REIT is a form of a CIS. It's more like it's a form of CIS. So you apply for a collective investment scheme, and then of course you specify what type of CIS you're looking for, in this case being a REIT. And so I just figured that's very, very important. Now, what I want to touch on is a key highlight for REITs. Why a REIT? What's special about the REIT? So in my experience, two things make REITs attractive for both the promoters and the potential shareholder. First is the tax efficiency for REITs. REITs have a different tax regime. I'll give an example in the next slide. REITs have a different tax regime from a normal corporates. So they have got favorable preferential tax treatments that typically lead to increased dividends, as opposed to if you're not being a REIT, increased profits. And as you can imagine, that's always good for the shareholders because the goal is to maximize shareholder wealth. So they've got a very intentional tax regime, which I think is interesting, and we'll touch on it a bit further. The second highlight for REIT is that the requirement to distribute dividends. So in Zambia's case, so REITs are typically not taxed. They don't pay corporate tax. So what you see is that the dividend that is declared, the only tax REITs pay is that the shareholders, they pay a withholding tax on the dividends received. So that's why there's always a requirement to pay dividends every period, because that's how the government gets their tax, because they don't get tax from corporate tax or from rental tax. They only get from withholding tax. So there's this requirement to constantly distribute dividends, I believe, is one of the key highlights for REITs, and one of the reasons why they're some of the best performing asset classes in the world. Here's a beautiful example to understand the REIT tax regime. So let's see a company. In the first example, we see a REIT registered company in Zambia owns commercial buildings in Osaka, our capital. You all should visit it. In Osaka, which are rented out to various tenants. Now, if the REIT's total revenue is 10 million, for example, meaning that your total revenue for rentals is 10 million. This is just an example, 10 million kwacha. Remember I said there's a requirement to cap your expenses at 30%. So let's say your expenses are at 30%, meaning that 30% of 10 million goes to 3 million. You pay 3 million. This is for a REIT, remember. You pay 3 million if you're a REIT, 3 million for expenses, no more operations expenses. Then after you pay expenses, you are required to distribute about 70%, at least 75% of the distributable income. So from the 10 million, you subtract the 3 million, which is the expenses. You have 7 million. And then from the 7 million, let's say you declare the entire surplus, 7 million, the entire surplus to be dividends. Then you're only paying, you're only paying 15%, which is withholding tax on the 7 million, meaning that the only taxes you're paying in this case, if you're a REIT, is 1 million. To understand why this is significant is, let's look at the other example in which you are not a REIT, but you are a property company. So first of all, let's assume you still incur the same expense, but remember, if you're not a REIT, meaning that this operational cost can go up because there's no threshold, there's no restriction. So you can see how it can easily go up to 45%. But for this purpose, let's assume you still cap your expenses at 30%, meaning that you still pay the 3 million kwacha for operations. Second, in Zambia, you're supposed to pay rental tax. You're supposed to pay rental tax of about 12.5 if you're a property company. So you pay an additional 1.25 million, which you wouldn't have paid if you're a REIT status. So 1.25 million is gone. Second, and then after that, what remains is profit before tax. And then after that, you have to pay corporate tax. So corporate tax in Zambia is about 3%, is about 35%. So when you pay that, so you have to pay another 35% on what remains. After you pay your rental taxes and your expenses, you have to pay 35% for corporate taxes. And then after you pay corporate taxes, what you have is profit after tax. And then from the profit after tax, you still have to pay 15%. You still have to pay 15% on dividends and announced if you're not a REIT. So what you see is that ultimately you end up paying, if you're not a REIT, you end up paying 2 million in taxes, in total taxes, by the virtue of not being a REIT. Now, remember that if you're a REIT, you're paying 1 million. Here, you're paying over 1 million kwacha more. You can see how this is significantly different. You can see how the there's preferential tax treatment for REITs, hence they are more favorable investment. Because you have to realize that if you're a shareholder, there's a 1 million, if there's a 1 million you gain by being a REIT that you wouldn't have gained if you invested in a normal property company. This is one of the best interesting features on REITs, and this is why they have gained significant momentum in the past few years. And we have seen how the West has leveraged the REIT framework to build residential infrastructure, retail and commercial buildings. And I really hope that in the next few years, more African countries, Rwanda inclusive, and Zambia, we grow our REIT, we grow the REIT market. In Zambia, we do have a few pipelines because our real estate market is growing. Kenya is much larger, but it's growing, and we see a lot of interest from the local, and our local regulators. They have made deliberate effort to develop the REIT structure in Zambia, and I really hope that we keep on having this conversation so that we grow this asset class. Thank you, Alice.
Thank you, Mr. Kalupa, for a good presentation. I'm going to apologize for a slight change because one of the presenter has requested to start. Now we are going to the next topic is a variable loan stock products as an asset class. The case of RDC Property Group listing on the BSC. This one will be presented by Mr. Guido Giachetti, Executive Chairman, Real Estate Group, and Vice Chair, RDC Property Group, Botswana.
Alice, good morning. Can you hear me?
Yes, I can.
Yes, this is Guido Giachetti. Nice speaking. I hope you can see my screen.
May I introduce you before?
Yeah, thank you.
Yeah, okay. Mr. Guido Giachetti is a civil engineer with advanced degrees from EPFL and Harvard. He is the chairman of Real Estate Group, a diversified company focusing on real estate, hospitality, and asset management with a commitment to sustainability. He has been recognized with several prestigious awards, including the Order of Merit by the King of Spain and Italy's Commendatore. He also serves as Italy's honorary consul in Botswana. Mr. Guido, the floor is yours. Thank you.
Good morning, Alice, and good morning to all the attendees. I hope you can see my screen. It's a pleasure to address you this morning. I have listened with interest to the previous speaker. Clearly, we are talking here about a different experience, which is the experience of RDC Property Group, which was listed in Botswana. And I'm going to go through the experience and the specificity of a variable rate loan stock. First of all, just a quick disclaimer. This is the view of RDC Properties. We are not tax advisors. We are. This is not an invitation to invest in RDC Properties. This is just on our experience, and I will give you all I can of the information of our company's journey. What is RDC today? RDC Property Group is a diversified group, as we heard before. We started in Botswana, and I'll tell you the journey from 1992 to 96 when we were converted in a variable rate loan stock. We operate in 7 different countries. We have 67 properties at this stage. And as you, particularly of interest to the participant here is the fact that being listed on the Rwanda Stock Exchange allowed us to do a lot of different capital raise, and with the support of the BSE, we're the largest portfolio on the BSE right now, with a portfolio of around 6 billion pula, and with a portfolio that is 75% held outside of the country. So we, through the assistance of the BSE, we were able to do some corporate actions over the last different years. In terms of portfolio, it's a portfolio that is diversified in hospitality income, office income, residential, retail, and industrial. And our purpose is to invest and own and manage strategic property assets that have a very strong community value. And we actually measure the community involvement across the portfolio. Coming back to the variable rate loan stock, I think the interesting thing is that we started the company, I'm the founder, I started the company in 1992. And it was really alongside other activities that we had as foreign investors in Botswana. It was mainly to do some small developments, and we started as a normal PTY company, limited, but the market was called the Botswana Stock Market. It was not even a stock exchange, and we were the first property fund. It was over the first 2-3 years of trading as a fund, as a development fund, we realized that we had very little interest from institutional investors. And in 1992, there were very few retail investors. And when we analyzed that, the reason was that the structure would be basically paying tax, and pension funds were able to invest directly into properties without having to pay taxes. So there were really there was no interest from institutional investors and pension funds to invest in our fund. We looked around, and at the time in South Africa, the legislation that was existing was the variable rate loan stocks legislation. It took us 2 years in Botswana to get that accepted by Bank of Botswana. At the time, we had foreign exchange regulations. The tax commissioner, the contention at the time was that it could be a tax system to evade tax, but in fact, it is not at all that way. So we managed from 1994 to 1996 to convert in a variable rate loan stock. And the company was called RDC Properties. I think of significance to is that we, over the years, we supported the Botswana Stock Exchange, and we were supported by the Botswana Stock Exchange, both with corporate bonds and with, we did 2 main large rights issues, which allowed us to take, the last one was in 2021, when we actually acquired 100% of one of the companies listed on the JSE, Johannesburg Stock Exchange. It was a year-long process of acquisition of that company, and that gave us immediately a much wider international reach. In terms of variable, for those of you that are not familiar with variable rate on stocks, I think that this is a busy slide, but fundamentally it's a debt-like attribute. The capital is restructured in a portion of capital and portion of debt to shareholders. They are invariably linked. The link can depend in different jurisdiction. In ours, we basically, the variable interest is payable and it is linked to the distribution of dividends. So if we pay one pool of dividend, you will declare 50 pool of interest payable to shareholders. And that interest to shareholders is actually tax deductible. So de facto, we are replicating a REITs in the sense that we do not, RDC generally do not pay taxes, or it pays taxes only where it has paid taxes in other legislation or in subsidiaries that are not REITs. The taxes then, withholding taxes are deducted from shareholders that are subject to withholding taxes. But in the legislation in Botswana, the pension funds are not subject to withholding tax, and they do not, so de facto they're receiving their income non-taxed. Whilst any other retail shareholder and any other corporate investor will have to declare their income on the interest received, and they all pay their taxes. In terms of seniority of debt, clearly it ranks before the equity holder, but because they are linked, the banks are still protected because they hold the security, and they rank before the linked in debt to shareholder, before the common shareholders' equity. I guess that we have the same restriction in the sense that we need to distribute at least 75% of the distributable income. We do not have a restriction on cost of operating costs. And I guess the advantage for Botswana of this type of structure is that it has really enabled the real estate sector to grow over time, because it was a process of growing and some of the REITs had done a portion of developments. We were in the first phase of our development of RDC property, we did quite a lot of developments, whilst some of the REITs legislation do not allow those kind of developments, or at least in large size developments. Clearly at this stage, with a portfolio of 6 billion pula, we're allowed to do some more corporate actions, and we are working on corporate actions, and we do acquisition of portfolios, and therefore the element of developments is slightly smaller, and we are not subject to any restriction. I guess this gives you in essence a VLS company capital structure leverage its instrument to provide much more flexibility and potentially has reduced costs, but it still allows some flexibility. So in a development economy like the Botswana one, it was very positive for us and for the country. There are now in Botswana, coming back to the slide that I started with, we have 6 listed company, and they're property companies. They're all variable rate loan stocks. And in different degrees, all of them have invested outside, or many of them have invested outside of the country. So it has really developed the real estate sector quite extensively. I guess this is all I wanted to mention. I'm happy to take questions if I may.
Thank you, Mr. Guido, for a good presentation and for sharing your experience. For sake of time, and because Mr. Guido is about to leave, I will allow a few minutes, but only for those having concerns on Mr. Guido's presentation. Only those one, please. If anyone has a question.
I see a hand raised by David Ross, but I'm not sure.
Yes,
that
sure,
hand has been up for long.
Yeah.
Hi, Guido. Thank you for your insightful presentation on your journey. Looking ahead, with your understanding of the Rwandan market, what would you prioritize as the areas for development of the capital markets regulatory and policy environment for to unlock capital to flow into the real estate and property sector here?
I'm really not a specialist of the Rwanda investment landscape, so it's a difficult question. I can refer back to Botswana. In Botswana, with the VRLSs, it has really allowed foreign investors and flow of capital of foreign investors. And we are a foreign investor in Botswana originally, and then from there, investment outside of the country. So the variable rate loan stock is a very simple, administratively a very simple structure. And by creating the IFSC regulation in Botswana, and to incentivize foreign investments, the Botswana authorities are allowed the overlaying an IFSC regulation, which makes it easier for institutional investors with foreign capital to actually even be exempt of that in withholding tax on dividends and on interest. So the withholding tax in Botswana is 15%. So the maximum tax paid by a foreign investor on the revenue from a variable loan would be 15%. And there are a number of tax agreements, DTAs between Botswana and different countries, so that withholding tax varies. So South African would have a lower regime. So it's actually a good incentive for capital from the SADC region or from other countries outside that have DTAs with Botswana to invest on the stock exchange. I hope I answered your question.
Yes, thank you. I think that there, across the three presentations we've heard today, tax advantages and tax reform are required or are an enabling factor for capital to flow.
Yeah.
Thank you, Mr. Guido. And for David, just to note that other speakers will go further on this question. Is there any other question?
Then thank you very much. I will unfortunately have to leave you because I have another commitment, but I'm always available. You have my contact for any of your guests. Thank you.
All right. Thank you, Mr. Hello?
Sorry, just a quick one.
All right. Go ahead, Olivier.
I'd included my question in the Q&A, but I think it wasn't read. Teboho, thanks. So my question is just to try and understand between what we have for REITs and what we have with the VRL stock, whether you can use it.
Mr. Teboho, you are breaking. We can't hear you very well.
Can you hear me now?
Yes, we can hear you now.
Okay. So the question is just to understand whether you can use this structure for capital raising, or do you require to have pre-existing property stock, similar to what we have learned about REITs from the previous presenter? Thank you.
In Botswana, the banks and any financial institution considers the unit, the linked unit. It's called a linked unit, not a share. A linked unit as an indivisible entity. So there is no the debenture is considered as quasi capital, as quasi equity. We've never had any problem in raising capital, both from on the bond market or on the commercial market.
Okay, no, thank you.
Yeah, that is a very important. It's a good question. It's a very important element to raise funds. That shareholders link unit, as it is purely variable and linked to the dividend distribution. It always comes as a bottom line on our P&L. So that's what it is.
Thank you. Just to note that Mr. Guido was in another conference in South Africa, but he prioritized our webinar. Thank you very much, Mr. Guido, for this. The next topic is a case study on experience sharing of REITs issuance in Kenya, the case of Stanlib and Econ Group. This will be presented by Mr. Kenneth Masika, the chair of Emeritus REIT Association of Kenya. Mr. Kenneth Masika is the chair of Emeritus of REIT Association of Kenya. He has over 24 years of experience in the property industry, specializing in urban property valuations across East Africa. He's a former CEO of Stanlib Fahari REIT. He expanded the REIT's portfolio, acquiring a Grade A commercial property in Nairobi. He's a partner at Lloyd Masika Limited and holds multiple professional memberships, including ICIFA and ISK, with the BSc in Land Management from University of Reading, UK. Mr. Kenneth, over to you.
Thank you very much. Good afternoon. Can you all hear me?
Yes, we can hear you very well.
Thank you very much. So thank you very much for the introduction. I think as I make just a small comment, I'll request Alice, if you can share my presentation. It's just 3 slides. I think in the beginning, sometimes when you follow your own chairman, Geoffrey, he really painted a very good picture of the REIT landscape in Kenya, what has been happening since the launch of the regulations and the onboarding of the 4 REITs that we have. So when I looked at the topic I was given to speak about, I felt maybe what would be more illuminating for the people on this call would be to illuminate what are the challenges that the REITs that are coming into market in Kenya have gone through, what are some of the solutions that they have come, they've been able to actualize, either they themselves or largely with the help of the REIT Association of Kenya, and finally just talk about a couple of points or going on to the future. So Alice, if you can share the first slide, please.
Okay. Amina, can you help me? Because I have an issue to project.
Yes, sure, Alice, a moment.
Thank you.
Able to see my screen?
Yes, we are. So if we can go to the next slide. So I think as we talk about REITs, and I won't go into this, I think it was adequately covered by both Geoffrey and Kalopa. I think we know the whole market structure of the way REITs operate. You'll tend to find that these challenges have been experienced almost everywhere worldwide where REITs have started. And the key challenge that we found in speaking about our part was limited market and public knowledge. And what we found with this was you found that even people who should understand what a REIT is, and here we're talking about property professionals, investment professionals, asset managers, lawyers, there was limited knowledge. And that then now resulted in a low uptake of REITs. So it was found that we need, if you think about setting a REIT, it is now encouraged for you to have a greater engagement. Pre-listing, this is where you're talking to the investors before they put in money. And post-listing, this is where you continue staying in touch with your investors, stakeholders, be they professional investors, the general public, and the like. And all of this is just to continue talking to them about the structure and educate them on the benefits and advantages of investing in a REIT. Obviously, the largest one of them being the favorable tax exemption that comes with REITs. Second challenge we found was obviously because it was new, the regulations having been launched in 2015, there was significant setup costs to setting up a REIT, which obviously had to be funded upfront. And this was your public relation, your marketing costs, your legal fees, tax consultancies, licenses, valuations of the properties that you want to put into the REIT. And also added to this would be your IM and the like. And so if you look over the years, that has come down. Fahari had cost about 371 million shillings. By the time we get to Acorn, that is at 114.5. And Lap Fund, who were the latest, that's at 111 million. And you can notice there's quite a rapid drop in the cost. This obviously has come about as you have your more involvement in market education and knowledge. You find the experts who are helping you put up some of these things, your IMs and the like, have an experience. So obviously your professional fees come down. Number three, key conditions precedent. I think this comes about largely out of the fact that in Kenya, you can't start an income REIT without actually having assets in the REIT. So what tends to happen is you can have a simultaneous process where you're fundraising the REITs while you're also launching the REIT. So you're fundraising to buy the properties and launching the REIT. The Capital Markets Authority would normally give a threshold hurdle that you must achieve. So obviously what happened there was, where the challenge comes in is you're fundraising to buy properties which are not already in the body of the fund. So also the investors or the landlords that you are approaching to buy these properties, again, do not understand a REIT structure very well. Again, you cannot also conclude the transactions without hitting the threshold. So in a long way, you can see that did lead to rather lengthy negotiations on the acquisitions of the properties. And for example, if you look at Fahari and Acorn, they took about 5 years before they came to launch. I think this key challenge is what I believe Zambia has tried to remedy by insisting that you must have assets in the body that you then want to structure as a REIT. And finally, like everybody knows, tax regulation, that tends to be quite challenging. What we found in Kenya was there were slight, not differences really. The way the legislation, the regulations for REITs were written, it was clear they were fully tax exempt. But then you'd find sometimes the Treasury would have their own interpretation. And obviously REITs are very sensitive to tax regimes. So one of the things we are grappling with in Kenya is stamp duty exemption and capital gains. So when the regulations began in 2015, they put an expiry stamp duty exemption for getting onto REITs, and that lapsed in 2022, I believe. So consequently, you find we actually have 2 REITs that have already got properties. Actually, not REITs. We've got 2 investment groups that have actually got properties on their portfolio that wish to transfer those properties into a REIT and launch, but what's holding them is the expiry of the stamp duty. So I think there's several other challenges after this, but these are the 4 major ones that anybody who's thinking about launching a REIT would need to pay attention. So I think as we move into the next slide, I'll then talk about what are some of the solutions that we came up. One back, please. So when we were looking at the solutions, and now I'll speak sort of personally as on my experience when I was running for Harry in the early days, we found that to get any of those challenges met or resolved in a fundamental way was very difficult, especially when we were doing it as a single REIT. Remember, you're talking to investors about investing into your investment offering. So obviously they will look and wonder, okay, are we being told exactly what's happening? So it was felt in those early days. Jeffrey was at NSC then, so himself, Edward Kirande of Acorn, Fahari at the time, we felt we needed an association that can now look at tackling all of these problems. So we started the REIT Association, and largely public awareness. We largely cover that through programs run through the association, and these programs are workshops, investor engagements. We also do have the culmination of the REIT conference, which I think some of you had the opportunity to attend. And that has gone a long way in growing public awareness over the last several years. I mean, you'll note we had the regulations quite early, and it took about 5 years before the first REIT came, which was Fahari, and then another 5 or 6 years before then we got ACON. But after ACON, we've now had Imara, and currently the REIT Association has got, I think, four or five incubators who are awaiting either approvals or finalizing their IMs and structures to launch. So I think as far as point number one goes, I think the association together with the Kenya Capital Markets Authority and the NSC, I think we can actually say that the message is getting out there because all of us run programs around public awareness. In terms of cost reduction, moving on to point number two, what we are doing, or what we're doing as a REIT association is, and I think Jeffrey touched on this, is a REIT Toolkit and Incubator program. I wouldn't delve into it significantly here, but it's on the website for the REIT Association. It is a comprehensive toolkit program. I mean, you will find everything that you require to set up a REIT. For example, if you take your IM, you will find the structure of an IM, what needs to be in an IM, all the disclosures that you need to have. And in that toolkit for the IM, you'll find that has been approved by the CMA and the NSC. So when you're working on that toolkit, you're not guessing, you're not shooting in the dark. Now, what that has resulted in is that now professionals are willing to charge a slightly lower fee because, again, they're not shooting in the dark as well. So using the REIT Toolkit and Incubator program, we've managed to get, or we are waiting now to see that the fruit of the labor will be in this 4 new REITs that are coming through, where we are anticipating to see the cost of launching a REIT reduced from the 111 target is around 75 to 80 million. Moving on to streamlining regulatory requirements. And I think what we have done with this, again, going back to the toolkit and incubator, is we've gone a long way to clarifying essential documents and working with the regulators. And largely here has been to smoothen the interpretation of regulation so that you don't have the CMA interpreting the regulation in one fashion and the revenue authority in another. So we've been having collaborative meetings with the team at Treasury, along with CMA and along with the REIT organization. So this first 3 are quite critical in getting the REIT out. And finally, number 4, lobbying for tax exemptions. I think this is common throughout all the countries that when you want to get an important exemption or a change in legislation, and especially given the difficult times that people are going through now, where I think every country is struggling with national debt and expense issues, then you find when you lobby as an institution, then that makes it a lot easier. So what we've been doing is we have been lobbying the National Treasury largely around the 2 taxes that are holding back the REITs, the stamp duty and the capital gains. It is an ongoing conversation, but we're very hopeful that we will get that resolved. So as one can see, there are some challenges, but the solutions are there, and they're not very complicated. So I think my last slide goes to Rwanda and basically talk about the future. I think what was the Kenyan market, or what were the people thinking about when they're looking at launching the REITs? And the first one obviously is to catalyze further property developments. I think like Geoffrey spoke about purpose-built student accommodation. You have a growing population of students who are going to school without a commensurate development in suitable accommodation to house them. Now, by using a REIT, that is a need that you have met. In Kenya, we are looking at also using development restructure that Geoffrey spoke about to also catalyze our affordable housing programs, and that is a work in progress. So again, that grows the whole property space. Number two, like everywhere else, we are looking at REITs to provide liquidity in the marketplace and have, especially institutional investors. A note here would be, if you look at development markets, you will find on average they tend to own your pension schemes, insurance companies, and the like. Will tend to have their, if you look at the property portfolio, more than 90% will be through REITs and less than 10% will be direct ownership. In the case in Kenya, what we found was it was pretty much the opposite. It was 95% direct ownership, 5% indirect ownership. And obviously that now results in, that personal exacerbates the illiquid nature of properties. You find on the pension funds or the insurance companies want to meet their liquidity obligations, so they had to sell the property. And I think they're starting to wake up to that and realizing that by putting your property in a REIT, you've got price discovery, you can sell the shares, liquidity is achieved a lot easier. Moving on to the next one, number three, is enhancing the structure and due diligence of property transactions. I think all of us here being property professionals, we have realized, or we've always grappled with pretty opaque nature of property transactions. Nobody really knows what has been achieved in a sale. So in determining your yields, your record keeping regulations and all of that, it becomes very difficult because the transactions are done between two parties. But if you have a REIT that's a listed entity where all these things are put out there, then it also gives a proper structure as to how to run a property portfolio. Number four, at the REIT institution, and this speaks now to like an institution, which is one of the things I would really encourage the RSC to look at driving, to get a lobby for anybody thinking about REITs to join. It becomes very easy then to set up a property transaction registry. And this then not only increases transparency, it also goes to drive the openness in the market in terms of yields and also the structure of your leases and licenses and all of that. I think property transparency cannot be overstated. Your investors need to know that you've bought the right asset at the right price. So obviously when it's in a REIT structure, as Geoffrey said, there are all those parties who look at the transaction, and obviously leading to, from that transparency, that people are more comfortable in investing. And finally, for anybody in insurance companies, pension funds, and individual investors, everybody invests in property to get a return. The REIT just ensures that that is done in a proper manner with a tax shield to it. And I think I will stop there. So what I want to say is thank you to the RSC for giving me this opportunity to speak to you. Congratulations on launching your REIT regulations. You're on the start of a very interesting journey. As always, it has been a pleasure speaking to you. Thank you very much.
Thank you, Ken, for a good presentation. As I mentioned even from the start after Jeff's presentation, Kenyans are ahead of us, and we are lucky we have you in the region. So thank you very much. The next topic is an overview of the real estate industry and potential of REITs development in Rwanda. This one will be presented by Mr. Charles Harber, Managing Director, Century Real Estate. Mr. Harber Charles has more than 2 decades of experience in real estate and housing finance in both the public and the private sector. He runs Century Real Estate Limited, a top property business in Rwanda, which has more than 200,000 square meters in its property portfolio. Mr. Charles is a director and investor in different companies in the domains of private equity, venture capital, financial solutions, real estate, entertainment, parking solutions, among others. Mr. Charles, the floor is yours. Thank you.
Good morning or good afternoon, wherever you would be. I hope you're able to see my screen. I'll just go to I think you've rushed to go to the previous page. Start from this first page. Are you able to see my screen?
But yeah. Oh, I was seeing it, but now it is gone. Okay. Okay, we can see it.
Okay. Great. Yes, so just thank you so much, Alice, for the introduction. And obviously, unlike Kenya and Botswana and South Africa, we are starting from a really very low, almost non-existent point. So we will be keen to learn. But of course, as this conversation begins, we are talking nothing but property. So it's extremely very important that we understand what the property landscape is like, and then therefore that people get to see what assets are available, what asset classes are in the market from a supply perspective, and what's coming on board, and naturally, of course, to understand what is being done. So basically, just to take you quickly through, this is who we are and what we do. We are an all-round property services shop, offering services in the residential, commercial space. We're very strong in the development consultancy space. We've been doing this business for just over 15 years today. And do quite a property and facilities management. Earlier on, there was a conversation around the importance of professionalism in the property management space and how that's key for the success of REITs. We have quite a bit of experience there, and then we do valuations. I think Geoffrey touched on the importance of those professions. And earlier on, there was also a conversation around the importance of titling and matching those titles with the assets that are on the market. In terms of our portfolio on residential, we've done standalones, townhouses, apartment blocks, high-end properties.
Excuse me, Herbert?
Yes.
Can you put it in presentation mode?
Okay. Like that? Are we?
Yes, thank you.
Okay, good. So do I need to go back, or we can continue from where we were, Alice? Okay, so just a presentation, I mean, a few slides of some of the projects that we've been involved in and around Kigali. And that's also, as I was saying earlier on, different types of residential properties, high density, medium density, and a lot of land acquisitions for service plots. Our commercial portfolio varies from office blocks, mixed-use buildings, built to suit, retail developments, and industrial buildings. Now, I think, and everyone who's spoken earlier on has spoken about the importance of the structure and how the market is. Typically, we don't differ too much from the other markets in terms of different ways of acquisition. But since we do not have REITs as yet, typically people would either buy properties by cash or through mortgages. But of late, we've been seeing quite a lot of joint ventures, and these are mainly done with developers or existing landowners, both in the private and public spaces, whether it's municipalities or government-owned businesses, and because ideally some of these institutions are seated on very good land. There was a conversation earlier on around ownership, and I think this is something that's very, very important as we start discussing REITs, that we have two different ways in which you can own property in Rwanda, and that's through freehold. That's mainly held on developed properties, and it's a right that is either that is held by nationals or corporate entities, where you find that there's a 50% shareholder who's a Rwandan, or where if the shareholders are not Rwandan, if the country where they come from, Rwandese, have freehold rights, then you can also get freehold rights. But extremely important to note is that you can also own a leasehold property, and our leases in Rwanda are not really in terms of the length of the tenure, but they are titles. So, and these vary from 20, 30, 49, and 99 years. As the legislation comes into place, this is something that the Capital Markets Authority would need to look into, that you do not have a mismatch between the tenure of the leasehold on the underlying assets and the way the REIT is structured. So this is one of the areas that would need to look into. In terms of the opportunities, obviously, whatever investment decision is based on the return that would be expected. We're seeing a very good high demand for value for money real estate, and that's across board, whether it's in residential, commercial, industrial land, because generally across all these asset classes, you find the supply is relatively low, partly because of the financing options, and then therefore a case for a REIT comes in quite handy. The yields, if you compare to the different asset classes, again, we're seeing residential averaging about 10%. It's very common for it to be a little bit higher. It's very product specific. We're seeing commercial averaging about 12%. In some cases, it can be about 15, but average is about 12. Land, usually land, we look at it from a capital appreciation perspective. It's about 20% per annum. I liked what the gentleman from Botswana said earlier on, that from a regulation perspective, their REITs must be already existing or developed properties. It will be very interesting to see how you can structure a REIT on a non-developed property, yet it is the one that shows that it has the highest propensity to appreciate. I think that's something that from a regulatory perspective should be looked into. We have a relatively decent pre-sales success, and that probably speaks to opportunity around a D-REIT, because the market is seeing a strong confidence from buyers for certain properties. We also like that the legislation is relatively strong. We have good condominium law in place. Of course, there's always room for improvement, especially around these new legislations. We have very good land laws in place, a strong investment code. We like in the property space that we have clean titles, hardly any stories of double titling and fake titles, which is very, very important, especially if you're going to go into trading in the open market. We have a standardized contracting process where, irrespective of where you're buying 1 acre of land or a commercial building, you will sign a standard land transfer contract. So those kind of soft procedures that the government has put in place are very attractive for us who are in the property space, and it's a huge advantage. Now, we naturally in every environment, and it's a conversation that as we discuss REITs, we believe that there is room for improvement in certain areas. I did speak earlier about a huge pre-sales culture. Even though we do have a huge pre-sales culture, Most developers usually prefer large upfront payments because it's predominantly a developers market. Music to the ears of the developers who are on this webinar. You can still get away with asking for large upfront payments in a property transaction. We think financing options are still limited, and structured financing opportunities still, there's a bit of room in there. We don't have too many banks that are excited to do long-term mortgages, so that sort of leaves a bit of room there for improvement. I think there's still room for, especially in the urban areas, Kigali City and the other secondary cities. We do have, not very frequent, but the zoning guidelines can change, and sometimes are really have to be adhered to the letter. So one needs to be a little bit careful that you do not structure a REIT and promise people a certain return, and somewhere along the way there is a change in the zoning guidelines that affects the return you had promised earlier on. Some entities are not as strong as the city of Kigali, yet we have decentralized government, so that's another room that you have to look into prior to investing. I think somebody also talked about awareness earlier on, that even amongst the best of professionals, you do not know, you do not have an understanding. Now, if REITs are fairly complicated, so you can imagine things that would be as straightforward as zoning guidelines. So we still, luckily, we live in a global village where a practicing project manager from Nairobi can easily walk into Kigali and do their thing. But we still think there's room for improvement in certain areas for the professionals, especially around supply of experienced ones. Sellers and owners' rights, there's still a bit of work that needs to be done in that space in terms of your rights and obligations. And we also believe that in growing economies like ours, it's extremely important that you have all the institutions in the room sort of speaking to one another. Now, very specific to how people are stepping onto the property ladder today. I had hinted about buying, so that's one of the most common. But the most common by far from a residential perspective is people are still building their own houses. We are seeing a very, very huge upsurge in people pulling funds together to form investment clubs, investment groups, and some of their portfolios are in excess of $200 million, and that's something that's really coming up quite a bit. We've had a few products of lease to own, especially in the residential space. It's not yet very well developed, largely because there's a huge mismatch between the tenure of funds that's available and how they are deployed. So the lack of patient capital sort of makes it a little bit difficult to structure these lease to own schemes, but it's something that's being looked into, especially to cover the affordable housing gap. Yeah. Now, some of the things I've been saying earlier on, as they speak to the opportunities around the REIT market that's under development in Rwanda. I've spoken about the investment clubs, and because these guys have really, the ones that have come into the market have done what you'd call proof of concept. They've built huge commercial properties that are earning income. They've done it once and twice, and then therefore they have shown that it can work. Now the sustainability of that, because some of these properties they've done are heavily financed by their own equity. Now, to be able to unlock that value that is in those assets, I think it's a huge opportunity that the REITs, the first REIT that will be floated would come in to address. But also it would mean that whoever is going to buy into whoever is going to invest into the REIT will have a proof of concept and an already income generating asset that they can, feel and touch and see how it's performing. So that's good. We do have a number of corporate entities that have invested in commercial and residential properties in the office space. And you'll generally find that the market may trust an existing corporate entity, whether it's a bank or an insurance company that has floated its property or that has invested in something ahead of your moms and pops shops. So that's another opportunity. And then I've mentioned earlier on about the investment clubs and groups, but some of them are their structure is different from they start out as associations or as cooperatives, and then not all of them evolve into corporate entities. So that's another opportunity that there is. Some of them may be as simple as having something in common, like being in the steel or manufacturing space, and they evolve to build multiple storied buildings. Somebody, I think earlier on we did mention I think the Kenyan example on some of the pension funds. In Rwanda, there's a huge opportunity around the public and quasi-public entities that have invested in hotels, apartments, and linking that to trust. I think that's a huge opportunity to be able to float some of their properties or to list some of their properties. That's a huge opportunity because again there's proof of concept. So I think those are the opportunities that are there, and Alice and everyone else on the webinar will be very keen to take some very specific questions and comments as we move along. Thank you so much.
Thank you, Mr. Charles. Now it's time to open the question for questions and answer. We have 2 questions in the chat box. The first one, it's from Vinod Naidu. He asked, the first question was, given the high domestic interest rate, REIT can be seen as a method to attract cheaper financing from diaspora and foreign funds. What portion in percentage or value of Kenyan REITs are owned by diaspora or foreign funds / investors? The second was what has been the average annual returns of the 4 Kenyan REITs? I think this would be addressed by whether Mr. Jeff or Ken, because it's about the Kenyan experience. Ken or Jeff, who can take those 2 questions?
All right, so I'll attempt, and I'll let Ken come to it as well. So yes, now the REIT market, as I mentioned earlier, the first, the second, and the 2 REITs that were issued later were anchored by an international investor. I can't remember the exact percentage, but they did come in substantially because they took a significant stake in them. I think something in the region of 20 to 30%. And that was to ensure success of that REIT. So they sort of supported that. And what we're seeing that as the REIT units are being tradable, we're seeing more and more international investors coming in on the secondary market side, or in the second and third fundraise. So it's getting traction. The Kenyan market, as you know, enjoys a lot of international investor flow. About 70% of their trading volume comes from international markets. So yes, it is a reasonable amount. The yields at the moment, I think on average we're looking at between 5 to 8% for now. But this is because these are the initial phase of the REITs. But I think incrementally, we expect to see better returns as the REITs stabilize, especially after the post-acquisition is complete. Maybe Ken can chime in. Thank you.
Yeah, thank you, Jeffrey. Yes, so absolutely, there is an opportunity to get foreign funds to invest in REITs. So the REIT structure lends itself to being a capital aggregator significantly. I think a lot of ACON, student accommodation funding, largely has come from foreign investors. And one of the learnings that we've taken from that, and when I was having a chat with them, was when you go out to fundraise and you explain that you're holding your assets in a REIT structure, you find the investors already understand that. They understand what a REIT is and all of that. So they're not too worried about whether it's what are the nuances of a property company or the like in the market. And that goes a long way into giving foreign investors the appetite to invest, where they can see a REIT structure that they understand and appreciate. They also very much are attracted to the zero corporation tax and the transparency that a REIT structure provides. Thank you.
Thank you, Ken and Jeff. I think the second question has been addressed by Mr. Guido. And I don't have another question in the chat box. If I missed one, please go ahead and ask. Yes, Agnes?
Sorry.
Hello? Can you hear
yes,
me?
Yes, Agnes, go ahead. Yes.
Yeah, my question goes to Geoffrey. What was the role of World Bank? The incubation program is still on. How is it structured? I guess this second one goes to Masika, right? Under incubation. But the role of World Bank, because I heard Geoffrey talking about that, what was the support in the whole value proposition of real estate investment in Kenya?
So thank you very much, Agnes. So as part of the interventions by World Bank to sort of support the financial sector in Kenya, we were able to get a JCAP program, a program under what they call JCAP, and that gave us some funding for running incubation sessions. So we had a couple of incubation sessions, actually 3-4 sessions were run, and they fully sponsored those sessions. We then had to provide them with a program update on how the incubatees are performing, what has been the impact of the incubation, and really the progress. So it is a support program, more of a technical support program for capacity building, for ensuring that we're able to do the facilitations, and it's still ongoing. We do expect to see another program early next year. And the whole plan is to make sure that we can get these incubatees to issuance stage. So that will be the success of the whole program, is to get REITs come to the market from that program. We've got four candidates who are currently in there planning, and we're seeing some very good progress.
Alice, may I ask a question?
On my part, I think
Sorry to interrupt.
Yes, go ahead, Ken. You have.
Okay. So on the part of the REIT Toolkit and incubation program, yes, it's ongoing. I think just like Jeffrey has said, we are expecting to see the first REITs come out of it in this, say, first and second quarter of 2025. and the IFC did give money under JCAP. But something else that we also saw when I was running Fahari, IFC actually invested in the REIT Fahari as well. And one of the reasons they do that is obviously you understand that IFC looks to invest in not normal funding that you can get from a bank and the like. So with the funding that we've got from JCAP for the toolkit and incubation is number one, they're looking for investment grade proposals that they can invest in, right? So if you go through the toolkit and incubator, they're confident and comfortable that has been handled properly and something they can put in money to. Number two, they're very keen on your ESG and green and sustainability. So again, that's built into the toolkit. So one of the requirements we had for their funding for the toolkit and incubator was, at the end of it, they just did not want capacity building only. They wanted capacity building, and at the end of it, to be able to have 3 to 4 potential REITs that then now they can look at. Thank
you. Agnes, I hope they addressed all your questions. Okay.
Yes, thank you.
All right. If there is no other questions, I will invite the Rwanda Stock Exchange CEO.
Sorry. Alice, one quick question.
All right, go ahead.
Sorry to interrupt. There is some problem with raising my hand and talking within the chat window. I put the question in the Q&A section. Jeffrey, thank you for your presentation. On the REIT ownership slide that you shared, there were several names of banks listed as investors of the different REITs, and then some of them said specifically listed something like nominees. Quick question: is this using the bank's own capital, or is this referring to individual account holders at the banks? And why would they not be listed in their own names or their own corporate names? Is the beneficial owner not disclosed in this type of investment? Can you kind of clarify that particular point?
No, so beneficial owners are reflected. However, pension funds and there's some other institutional investors trade through custodians. So custodians are the sort of legal owners or hold the assets in their favor. So that's why you find them held in the nominee accounts of these banks. These are not the banks themselves. They have clients behind them, but they're just the custodian accounts of these clients.
Individuals or institutions or both?
Institutions and individuals. It's actually a choice. You can decide to hold your assets directly in your name, or you can decide to go to a custodian. But pension funds are compelled to use a custodian under the law.
Thank you.
Yvette, can you mute? Does anyone have a question? All right. If not, allow me to invite the Rwanda Stock Exchange CEO for his final thoughts on this webinar. Mr. Pierre Celestin Rwakumva is the CEO of the Rwanda Stock Exchange. There is a background. Sorry for a technical issue. Mr. Pierre Celestin Rwakumva is the CEO of the Rwanda Stock Exchange and President of African Securities Exchange Association, ASEA. Wabkumba is a seasoned leader in finance and business with over 2 decades of experience. He serves on numerous boards in finance, hospitality, and manufacturing, and has led major projects in real estate, energy, and agro-processing. He's an alumni of University of Buffalo and an advanced management program of executives, Strathmore, Lagos, and IESE, and he has played key roles in ESC and ECAS negotiations, advancing regional financial integration. CEO, the floor is yours.
Thank you, Alice. Thank you, all the panelists. Mine is going just to be giving the vote of thanks. I think this particular webinar is a start of a long journey we have ahead of us. I think the framework has been put in place. Now we have to walk the talk because now we will not be having any more excuses. I just wanted to thank the different speakers who have given us a lot of knowledge and the participants in the market or all the stakeholders. I really wanted to again thank you for being responding to our invitation. Jeff and team in Nairobi, you know, we are going really to follow your footsteps. Zambia and Botswana experience is very, very crucial for what we have learned today. I hope our stakeholders here in Rwanda and those who are following us are going to be with us on this whole journey. You know, the learnings were quite a bit, you know, we are getting fancy. I think in the different terms, different products that can come out of this. We've learned new concepts. I'm sure that a lot of people were not aware of variable stock loans, for example, that we've gotten an elaborate presentation about, and among others. But at the same time, we also got a few tips on what to follow or the way forward, and what to watch out for and what to avoid, opportunities and challenges that we can learn from. There were issues of taxation that we must pay attention to, incentives and regulatory frameworks and harmonization here and there. But again, I'm not going to preempt what my regulator is going to say, as he is going to be the one to do the closing remarks. But I'm sure we are all aligned, and please stay tuned for what's to come, because we are going to forge a way forward very soon, and we launch this market for the whole country and the region, of course, at large, because we are not in isolation. So again, thank you for being with us. I give now the floor to CEO Tapelo of the Capital Markets Authority to give us his closing remarks. I think we have done well on the time, slightly over time, but I think it was worth it. Thank you.
Thank you, Celestine, and thanks to the teams at Rwanda Stock Exchange and Capital Markets Authority for putting this together, and thanks to all the 100 or so people who participated in the webinar. I think it's the start of some very good information dissemination, but I think like Celestine says, I mean, as regulators and also as the stock exchange, they can only provide a platform for people to come and utilize these platforms to actually issue REITs and then structure REITs. At the Capital Markets Authority, I think we have taken a developmental perspective. We work very closely with everyone, the stock exchange and all market participants, to really try to speed up some of the innovations and development in the Rwanda capital markets. And I can tell you, immediately I arrived in Kigali 4 months ago as the new CEO of Capital Markets Authority. I could see this market is ripe for REITs. This market is ripe for a variable loan stock. And I think we are very ready together with the stock exchange at CMA level and at the RSE to have some speedy conversation in terms of moving this forward. We are always available to guide, to help, to assist, and also to open doors for any person in the industry who might want to take the first step forward. And I think I looked at the RSE REITs regulations, which we approved as CMA, and I think they are of good standard, and therefore I will invite everyone to get partners and get together or just come to us, and let's get the ball rolling in terms of bringing this product to the market. One thing that I've realized about the property or the REITs market is that it also gives a lot of attraction to diversified investors, be it local investors and also a substantial number of foreign investors, because it gives a smooth, nice return over a sustained long period of time. And therefore, I think with those few remarks, I won't be long. I'll just only be in the office waiting for anyone willing to come forward to meet us, to assist as the regulator to really structure the REITs or the variable loan stock in the Rwanda capital markets. With those few remarks, let me thank everyone, and especially our speakers who took their time to present us for free and share their knowledge with us for free, because I know it takes a lot of time to actually put those slides together, to actually take time out of your busy schedule to give us some free information. Presentations, I think Alice, the Stock Exchange, will be shared and also will be shared at the CMA level. I thank you, and that's my last remarks. Thank you, Celestine.
Thank you very much, CEO. I think this brings us to the close of our webinar. All the speakers, potential investors, professionals, our brothers from Kenya and around the continent, thank you, and we are waiting for you. We'll be calling you soon. Thank you. Enjoy your lunch.
Thank you, everyone.
Thank you. Thank you, CEO.